Hi students, how are you all? I hope you are fine and safe at your home. I am Bhupati from the Department of Commerce in Bharathidhasanar Matric Higher Secondary School, Arakkonam. Now I am going to teach 11th Standard Accountancy, Chapter number 1, Introduction to Accounting. Basic accounting terminologies. Okay. What are the basic words we are used in the accountancy? We will see one by one. First is the transaction. What is transaction? Transaction is an activity, exchange of money from one person to another person. It is called transaction. Next one is the cash transaction. What is cash transaction? When cash are transferred from one person to another person by trading activities like that, trading of goods and services from one person to another person, it is called cash transaction. Otherwise, when the goods are sold to another person and cash immediately received from the buyer is called cash transaction. Next one is the credit transaction. Credit transactions means a transaction occurred at present. For example, one person bought a goods from company and then later on period he will pay the amount for the purchase of goods. It is called credit transaction. That means the transaction happened at that time, but the cash for the transaction will be paid by the buyer in later on period. Next one is the accounts. Nanda, what is mean by accounts? You are right. Accountancy is nothing but the reports. Accounts means report. The report which describe the financial status of the company or financial position about the business organization, that is called accounts. Next one is the capital. Vignesh, what is mean by capital? You are right. Capital is the amount which is needed to form a company. So, how much of money is required to form a business organization is called capital. The capital is a very big amount for starting up a company. It may be a small amount in case if you are starting a sole proprietorship or partnership firm. It is based on the business you have to start up. So, capital is the very large money which will be given by a persons. They are nothing but the proprietor or owner or shareholders. So, the person who give money to the business organization is called owner, otherwise proprietor, otherwise called shareholder. So, person one who give the money to the company as a capital is called owner or proprietor or shareholder based on the type of business they undertake. So, capital is the money which is needed to start up a company. The person one who give the money to the business organization is called owner or proprietor or shareholder. Next one is the drawings. Nanda, what is mean by drawings? Correct. The owner of the business organization take part of the goods from the organization for his personal use is called drawings. So, drawing means the owner takes some of goods of the business organization for his own use. It is called drawings. Next one is voucher. What is voucher? Voucher is a written or printed document to support the transaction happening in the business. So, it is a transaction document which is support to the transaction happening in the business organization. It will be in the form of printer, either printer or written document. For example, cash received. Next one is the invoice. What is invoice? Invoice is a statement prepared by the seller. In invoice, what all the items will be included in the invoice? What types of goods are sold to the buyer, on which date the sale made to the buyer, and how many quantities are sold to the buyer and how much value of the goods are transferred from seller to buyer. So, these all the information will be disclosed in the invoice. Next, goods. What is meant by goods? Goods are things or anything which is used in the business organization. Things or goods or anything product which is used in the business organization is called goods. Next one is the purchase. Okay. Mansur, now tell me what is mean by purchase? Correct. Buying of goods and raw material from the buyer is called purchase. Okay. For what purpose we are purchasing the raw material from the producer? I will tell you. To produce the finished goods or final used goods to the consumer, we are purchasing raw material from the producer or from agriculture persons or the suppliers. The company purchases raw material from the suppliers and then convert the raw material into finished goods and supply the customer. By satisfying the consumer, the company earn the profit. So, see the next one. Purchase return or return outwards. Okay. Purchase return means when the company purchased raw material from the another person or another company, it will not be satisfied in some of way, it will be returned to the supplier, those who supply the goods. Okay. Tamil Selvan, now tell me, for what purpose we return the goods to the supplier? Correct. When the goods are damaged, the company didn't accept because the company pay amount for the purchase of goods and services. Then why should we accept damaged goods for our consumption? So that the company return the goods to the supplier. For what purpose means? If the goods are damaged or mismatched or unnecessary goods are supplied to the company will return the goods to the supplier. Next, sales. Sales is nothing but the company purchase raw material from the persons and then convert the raw materials into finished goods. Finally, the company sell the goods to the consumers. The consumer buy the products from the company and paid the cash to the company. So, sales is nothing but sold the goods to buyer and receive cash from buyer. This is the sales. And then, Nanda, what is the major income of the company in business organization? Correct. Sales is the major income for each and every company because the major income is gained through the sale of the products and the services by the company. See the second one, sales return or return inwards. Okay. The company sold the goods to the consumer. Sometimes the consumer return the goods to the company. Dinesh Kumar, now tell me why the consumers are return the goods to the company? Correct. When the goods are damaged or broken or mismatched products are sent to the consumer by the company, that time the consumer didn't accept the unnecessary goods, mismatched goods, damaged goods, broken goods. That is why they return the goods to the company. Next one is the stock. Stock is nothing but the goods in the hands of the company. The stock may be in the form of opening stock or closing stock. What is the difference between closing stock and opening stock, sir? Closing stock is nothing but at the end of the financial year. What is the end of the financial year? Correct. 31st March of every year. So, 31st March of the every year is called end of the financial year. So, at the end of the financial year, how much of goods are in the hands of the company is called closing stock. Then, what is the opening stock, sir? The closing stock of the 1 year is the opening stock of the next year. Nanda, what is the opening date of the accounting year? Correct. 1st April. So, 1st April of every year we call opening of the year. So, Closing stock of the last year is called opening stock of the current year. This is a difference between closing stock and opening stock. And see the next one, income. What is income? Income is nothing but the company produced the good and sold the goods to the consumer and earning the money from the consumer. This is what income. Income means the company received money by financial activities or trading activities or administration and selling activities of the company. This is called income. Next one is the expenses. What is expenses? The company spends sum of money to run the company. For each and every transaction, each and every steps, the company spend income. The company spend money to carry out the business activities in the all the stages of company. This is called expenses. Next, solvency. What is solvency, sir? Solvency is nothing but the capability of a person to repay the debts which is borrowed from a person. This is called solvency. If a person is solvency, he can borrow any much of amount. How much of amount? Large amount can be borrowed from other persons, and then he can borrow repay the amount at the right time at the right person. This is called solvency. Next one is the insolvency. Insolvency means a person borrowed money from other persons. After a particular time, he can't repay the amount to the borrowed person. That means supplier or creditor. That is called insolvency. Insolvent means he can't solve the problem, money problem. This is called insolvency. See the next one. Asset. What is mean by asset, sir? In business organization, whatever can be converted into cash with a short period, it is called asset. See the asset. For example of asset, cash in hand, cash at bank, closing stock, and then debtors. Who is a debtor? Debtor is a person, one who received the goods from the company on the basis of credit. Later on that, he will pay the amount to the purchase of goods and services. And then machinery. Machinery is the product which is used for production of goods and services in the company. And then prepaid expenses. Some of the expenses are paid by the company in advance. For example, insurance. So these are the example of assets. Okay. See the next one is a liability. What is liability, sir? Liability is nothing but obligation of the business organization which repay the amount to the buyers. Who's that? First one is the capital amount, the shareholders, proprietors, owners amount. The company have liability, have obligation, have duty to repay the amount to the owners at that they want at right time. So that example for that, proprietors fund, capital and creditors fund and outstanding expenses. Salary outstanding is a example for the liabilities. See the next one. Debtor. Who is a debtor, sir? A debtor is a person, one who receives goods and services and cash from the company on the basis of credit. He is called debtor. Then creditor. Who is a creditor, sir? Creditor is a person, one who give the money or supply the goods and services to the company on the basis of credit. After some certain period, he can get the money for the goods and services which is already supplied to the company. So this is called creditor. Then depreciation. What is depreciation? Depreciation is nothing but the gradual decrease the value of the asset is called depreciation. For what are the reasons behind the depreciation, sir? Some of the assets are decreased by usage of assets. By using asset, we day by day the value of the asset will decrease. Some of the goods are decrease the value due to the invention of the products. If a new product is come to the market, the old product will lose the value of the product. This is called depreciation. See the next one, bad debts. What is bad debts? When the debts are uncollected from the debtors, it is called bad debts. That means the debt which cannot be which cannot be collected from the debtors is called bad debts. Do you know what are the bad debts in the companies? A debt which is cannot be recovered from the debtors, it is called bad debts. In recently our central government also 1600 crores the amount given to the businessman as a loans is written off as a bad debts. Next one is the branches of accounting. What are the branches in accountancy? First one is the financial accounting. The financial accounting reveals about the financial transaction in the business organization. Second one is the cost accounting. Nanda, for what purpose we are preparing cost accounting? Correct. To ascertain the cost of the each and every product produced in the company and how to control the cost of the each product is the purpose of preparing cost accounting. See the next one, management accounting. Management accounting is nothing but to manage the financial condition in the organization. It is called management accounting. For what purpose we are preparing management accounting, sir? To take a correct decision, accurate decision and favorable decision making in the organization. We use the management information. The management has take the decision making in the organization is called management accounting. Next one is the social responsibility accounting. In each and every business organization have social responsibility to do the some of the good and help to the society to uplift the life of the people who are living in the country. Next one is the human resource accounting. How much of money invested in the human resources in the company and how much of money losses due to the exiting, that means retirement of peoples who are in the organization, called human resource accounting. Next one is basis of accounting. First one is the cash basis, second one is the accrual or mercantile basis, third one is the mixed or hybrid basis. We will see one by one. First one is the cash basis. The accounting transaction which are mentioned in the cash, that means actual cash received and actual cash payments are only recorded in the books of accounting. That is called cash basis. Next one is the accrual or mercantile basis, whether the expenses or income paid or not but has been earned or accrued in the business organization, which will be recorded. In accrual basis, whether expenses paid or accrued, the income or received or accrued, that should be recorded in the business transaction is called accrual or mercantile basis. See the next one, hybrid or mixed basis. In hybrid or mixed basis, both cash basis and accrual basis, both two basics are followed in this basis. This is called hybrid and mixed basis. Uses of accounting informations. Nanda, tell me, who are the users? Correct, internal user and external users. Who are the internal users? The employee and management. These two persons are internal users of the accounting. And who are the external users? External users are outside the company, which may use the financial information of the company. First one is the investors, second one is the public, and third one is who's that? Company, government. These three persons are using the accounting information to know about the company. Next one is the role of accountant. In every organization, what is the role performed by accountant? First one is the record keeper. He should keep the record of each and every transaction happening in the business organization. He should record in the books of accounts. Second one is the provider of information to the management. The management has supervised the activities of the business organization. Whenever they need information, the accountant should be given the right information at the right time. The management take correct decision to uplift the company to the next level. Third one is the protector of business assets, because the accountant record the each and every position of the assets and liabilities in the company. So, he should safeguard the assets which are in the company by the way of safeguarding the shareholders also. Next one is the financial advisor. an accountant know about the financial condition of the company. Sometimes he will also give advice to the management and the company what should do and what should not do in the business organization. That is called financial advice. Next one is a tax manager. As a accountant working as a tax manager, he must know for how much of tax is paid to the sale of the goods and services by the company, or how much of tax should be paid to the government for the turnover of the company. So he is also very good person in the tax management. Last one is the public relation officer. Whenever the information needed about the company, the accountant will reveal the information to the both internal user and external user respectively. So this is the basic accounting terminology used in the accountancy. Okay students, for your further reference I attached study material, PowerPoint presentation, question bank and self evaluation test question paper in the description. Use it. Dear parents, help your children to do their work. Thank you.